Let's get to the markets a day after a 275-point drop for the Dow. Joining us is Sylvia Jablonski, Defiance ETFs CEO, co-founder, and chief investment officer. Not too bad. It's from some recent highs, a series of recent highs, Sylvia, and Jay Powell acknowledging perhaps that the rate cut, the hope for rate cuts had gotten ahead of itself. Just acknowledging it. It doesn't change what we've seen for the past 6 weeks in terms of economic numbers. Didn't we know that the economy was stronger with all these data points and that near-term cuts weren't likely?
Yeah, good morning, Joe. Well, we sure knew that the economy was looking pretty strong. If you look at the data, the economic data that has just been coming in, as you said, for the last 6 weeks or so, it's really hard to debate that, Fed Chair Powell should cut rates. There's always the belief, though, that he can overdo it and not, do it soon enough. And that can kind of change the turn of things here in the economy. But, I think the market pricing in March cuts last year was not very accurate and unlikely to happen. So I don't expect him to cut anytime soon. I think we're looking at the second half of the year, but I don't think it matters that much. The market is holding up well. We have 80% of companies reporting 8% year-over-year growth, beats on, across the board, particularly in the tech names. Jobs are strong, wage growth is strong, the consumer is strong, loads of cash on the sidelines that can come into the market. I think it's okay for the market, and it seems to be okay for the economy. We got that soft landing. Inflation is coming down, and I expect positive momentum here.
Well, maybe the earnings part of the calculation that stays solid or moves higher, and then maybe multiples don't go up because of rate cuts. But if earnings are good, you can pass the baton to better than expected earnings to keep the market, to keep valuations where they are. Sylvia, we have been talking recently about whether the Phillips curve or whatever you want to look at it, unemployment, what is really related to inflation and interest rates. And if inflation were to continue to moderate, even if growth didn't slow, the Fed could, I don't know if the Fed would cut then. I mean, there is a calculation you can do. They use, core PCE, and you figure out where short-term rates should be. So you don't necessarily need a poor economy to bring rates down if inflation cools.
Yeah, that's right. And so I think what the Fed is trying to do, my sense is when you listen to Fed Chair Powell, a lot of what he says seems to me that there's a little bit of, PTSD about transitory, what went wrong the first time and not kind of raising rates quickly enough. And so I think part of this is also psychological. They're probably pretty close to where they need to be in terms of getting around, the fact that they paused tells you that they understand that it's time to potentially go the other way. My sense is that he's going to hold on for a couple of months and just, make sure that nothing is heating up. And once he gets a couple more steady reads, he'll start to cut. I think, it's an election year, and I think any kind of policy decision misstep from the Fed would kind of be a disaster. So I think he'll just kind of err to the side of conservativeness here and just get a couple more reads where inflation looks stable. And to your point, it doesn't have to necessarily keep, shooting down. It just can't keep bumping up, and we're on that path already.
But then again, we stayed in this low interest rate environment. Probably that was not normal. It was back to back. It had the financial crisis and then the pandemic. So I don't know what normalizing rates is, but certainly you'd like to have a little leeway if there were to be a slowdown for you to cut. So, I mean, there's no reason to give that back, to give back that dry powder. If the economy is doing fine and doesn't need any stimulus, why not leave it about where it is if you theoretically could be at neutral right now? So why cut?
Well, I think, there are a couple of things to consider there, right? So the companies that are doing very well right now are companies that have, heavy balance sheets. They don't necessarily need so much borrowing. You're talking about the Mag 7. Rates haven't impacted them quite as hard as they have small cap companies that have to borrow at higher levels. You also just think about the general economy and, the ability to buy a house, for example, and where mortgage rates lie. So I do think, and although they've, kind of been here before and the economy has been just fine, I do think there's a happier balance between zero and where we are now, right? If rates come down a little bit, you get a little bit more of a healthy economy in terms of, again, being able to buy that first home, smaller growth companies beginning to grow and thrive and expand the breadth of market performance. So I do think that matters somewhat. And we are pretty close to that point where those smaller companies haven't had a chance to grow.
Yeah, I mean, housing, sometimes higher rates can actually be inflationary instead of actually curing inflation. Everything costs more for people. So if you can make things more affordable, without engendering inflation, that's probably something the Fed would like to do. So is the leadership this year, Sylvia, is that going to change at all? Since we do have an election and we do have a different. Theoretically, we're not going to be in a period of rising rates, most likely. So do you change what you're doing or stay the course?
I'm not going to change what I'm doing. I just think that AI is in its infancy. And last year it was a buzzword. This year it's actually being implemented. It's showing up in earnings. It's starting to show up in projections for the next couple of years. You look at AMD's outlook, although earnings weren't what we expected, they're talking about, 3 billion growth in GPUs, things like this. So I think that there's a lot of momentum in technology. And, who is AI? Who is sort of quantum computing, supercomputing? It's the Mag 7 minus Tesla. It's probably still Tesla to be fair, but the six are really thriving there. I think we'll see some breadth expansion. It is an election year. And I do think if rates come down, you'll also see breadth expansion there. And two other sectors that are pretty interesting that, we don't talk about as much are travel, for example. You have 4.7 billion people slated to travel this year, cruises, hotels, airlines, that's pre-pandemic levels. Those earnings have been great. The CEOs have had really bullish outlooks on their next couple of quarters. And then, healthcare, this Ozempic weight loss thing is just taking off, and these healthcare companies are one to watch for the first time. They've been kind of, dead bugs for a little while, and we're starting to see some performance in some of those names like, Lilly and Novartis and whatnot.